Hello and welcome to the macro of it for the end of the week starting the 4th of August 2017. Well, what I started the week looking at is certainly not what you need to be looking at now, and macro thematics always do bring these up, and you can't go past geopolitical tensions. Clearly what's going on between Washington and Pyongyang is going to dominate at least the very, very short term, next couple of weeks. It's going to be a lot of political rhetoric. It's also going to be a lot of safe haven buying. And I really want to sort of allude and point out a few things that are always very interesting when this sort of idea, this sort of movement happens. Middle East tensions are another point. If you also have a look at what happens with Brexit, or when there are tensions between the US and whoever, they always come along that. So clearly gold, everybody would have alluded to that. Everybody's pointed out that it is very much on the way, moving towards 13 US an ounce. That's all well and good. What I want to look at is how you pick it up in other parts. What I always like looking at, look at the inverse correlation between dollar yen, and that's the US dollar, versus gold. And that is almost perfect tick for tick. And the reason for it is that the Japanese yen is actually the safest currency on the planet, followed by the Swiss franc. And the Swiss franc is the other one to look at. Have a look at Euro Swiss, also Pound Swiss, and Aussie Swiss as well. They're all moving in the idea that there's a big risk-off trade happening. And that's a real interesting development, and that's what you would expect in this current market. Have a look also at the Australian 10-year if you want to have a look at that. There was a big leg down. The yield moved from around about 2.71 down to 2.6. 11 basis points in bond markets is a ginormous move, and that shows you that there is a clear risk off and a lot of money is moving out of risk. And that's what we saw the equity markets this week take a bit of a bath. It's come across in the US, it's happened here in Australia, and it's happening in Asia. Just getting back to that dollar yen trade as well, watch also what goes on inside the Nikkei. The inverse correlation between the yen and the Nikkei is one of the highest, if not the highest correlation for a developed country and a developed index around. It's about 70 to as much as 81 in terms of that number. So if the yen appreciates, the Nikkei goes down, and the Nikkei is the biggest indicator for Asia, and we get led by that as well. So I know that's a little bit away from what we normally talk about, but I think it's very interesting and something to be very much on your radar over the next short period of time, because it will move things around. And unfortunately, despite the fact that it's earnings season, micro stuff just gets drowned out, and that is clearly what's happened this week. So the Chinese numbers that I spoke about on Monday, they came choppy. Inflation was weak, which was expected. So you've actually seen a bit of a ramp up in commodities as you expect a ramp up in spending. It's been drowned out of the market. Finally, before I get off and move to something else, you also need to probably look at what goes on, not just in gold, but silver. And the reason I look at silver, it's a really tough one to really think about actually investing in any shape or form. But again, it's an indicator for you. It's a leading and quite a leveraged indicator. It really does ramp up when you see volatility. And that's what's also happened as well. The volatility in the US, here in Australia, and also in Europe have broken out of really conservative levels, but not to the same extent that you've seen in silver. So just watch that as well. Expect volatility to track up on that. And that's another sort of example to have a look at as well. Finally, really do need to look at some macro stuff that's happened here in Australia, and that's actually what happened with Philip Lowe's testimony to the committee this week. There was nobody there, which is kind of strange considering what he said was one of the most important things to be aware of in Australian economics for the first time in a long time. He said the most likely move in rates, the next move that will be up. And it really did put the Aussie on the upward trajectory despite all this risk. So the fact that you now have a governor who is hawkish, that is stating about the fact that if rates are to move in any direction over the next period, it is to the upside, that is your base case. And that needs to also be in your thinking. And I think that's why I've spoken before that the Aussie is more likely to head towards low 80 sort of cent handle rather than sort of the low 70 cent handle, because we have a central bank here that probably wants to raise rates. We're losing a possibility of a rate rise over in the US. And then there's a commodity story as well. So just be aware of that. Philip Lowe is looking to raise rates. It's not going to happen tomorrow, and it's not going to happen this year, but he wants to move up rather than move down. And that needs to be part of your thinking as well. Have a good week. Speak to you next week.
Did you know your membership gives you access to our superannuation advice section? Log on to either InvestSMART or Eureka Report to access the latest information you need to know to manage your SMSF and get access to our live advisor Q&As with our tax and super experts Max Newnham and Bruce Bramall.